Hey, good morning, everybody. It is Tuesday, May 19th, 2026. I, of course, am Hammer, founder of Hammer Solutions, home of great products to help my originator friends get more business online, to build their online brand, generate reviews, get business from social, Google, AI search. If you want to learn more about those things, check out our different products down below. We've got Originator Success, we've got Grab and Go Social, and we've got Rate Sensei. Go check those out. They will help you to get more loans in 2026, even though rates are moving up. So remember, you can join me live each and every weekday morning, 9:30 a.m. Eastern time, where we talk about what's going on with rates and pricing in the markets, in the headlines, everything working on the mortgage industry here, especially about rates and where things are going. Today, it's a bad day, y'all. Bad news, bad day. Rate sheets are going to be worse. I'll give you the details in a minute, but it's ugly. I'll give you a quick recap of what happened yesterday, what we've got going on today, and where things might go from here. Remember, if you don't want to miss a moment of the show, make sure you get our text as I'm going live. You'll get that text message reminder with the links to the show on Facebook and YouTube. hmmr.io/reminder to sign up for those text reminders or this cool QR code over here. Also, you can sign up and get our email lock advice at www.ratelockadvice.com. That's already been sent out this morning. And last but not least, don't forget to check out our text alerts. If you want to support me and get some great knowledge, it's ratetextalerts.com. They're $7 a month. We send out a morning text, an afternoon text, and then alerts like yesterday before all those ugly reprices worse hit out. So be sure to check those out. Let's go ahead and say hi to all the live folks. If you're here this morning, say good morning. Appreciate you being here. If you're watching the replay, do me a favor. Just give me a hashtag replay in the comments. Let me know that you were here as well. Don't forget to smash that like button on Facebook. Subscribe if you're on YouTube, all that good stuff. And your comments help with engagement and keep me engaged. So make sure you go ahead and say hello and give me your comments. Ron Siegel's always chiming in with some great stuff. I know many of you have some things to say or questions to have. Anything you want to ask me, we are here live to talk about. So again, welcome to all the live folks. We'll say a quick hello and then we'll jump in and get started. Good morning, Mallory Fodiatis and Nicole Semerad, Randy Teagle, giddy up, sir. Sean Segeloff. Yeah, Sean Segeloff making a note about how the Wall Street Journal has perma-blocked me. None of my comments ever go through. I have been lifetime banned from commenting. That's what happens when you troll people in the comments on the Wall Street Journal. Good morning, Mr. Zane. Have a good day at school, my friend. Good morning, Holly Johnson, Megan Bassell, Randy Tico, fancy hat. Yes, sir. And I've got a really cool hat band. It should be coming in the mail today. I'll be sharing that. I think I want to give this a little bit more of a curl, though. It's a little bit more my style. I don't hate this. I actually do like it quite a bit, but I am a little bit more of a curl guy. Think I will be doing that as well. Ron Siegel said today is National Devil's Food Cake Day. That one I can get behind. Question of the day, if you feel like answering it, do you prefer, we're doing a, what do you prefer? What do you prefer? Devil's food cake or angel's food cake? This says nothing about your personality or where you may spend eternity. This is just all about that chocolate or fluffy vanilla cream kind of cake. So what do you prefer, devil's food cake or angel's food cake? Let me know in the comments. Ron Siegel says today is National Devil's Food Cake. I'm a devil's food cake guy. Give me the chocolate. Load me up on the chocolate. This is how you know you found your soulmate. I'm a chocolate guy. My wife is a vanilla gal. So even though she says I am vanilla. Ron Siegel says I need a perm to get my curls. I have to perm this, dude, because that's all I have left. You and I are follically challenged. I know you know where I'm coming from. Good morning, Scott Blake, Michelle Shoemaker, Brandy Brickler, Kathy Jensen, Jesse Lynch. Good morning, all. Good to have you all here. So go ahead and pop in your comments. I'm going to go ahead and get started. We're going to jump in. Let's go ahead and start with the technicals and where things are at this morning. So taking a look this morning, you'll see that the 5.5 coupon currently down 42 basis points this morning. If I'm speaking Greek to you, what that means, this is called an oh shit. This is called an oh shit. basically, when you're down about this much, this means that rates are going to be about an eighth of a point higher this morning than what they were at yesterday. When you are down 42 basis points before pricing even comes out, it is ugly. 10-year Treasury yield 4.65, highest yield we've seen since around this time last year. I think it was July of last year. And it's not just U.S. bonds. It's not just mortgage-backed securities. It's not just the U.S. Treasuries. It's global bonds across the, all across the world. So we'll dig more into that in a minute. Let me go ahead and let me shrink this up a little bit and fit this on here to get that on for you here. Hold on a minute. All right. So let's take a look at what happened yesterday. Let me shrink this just a hair. Hold on. Boop. There we go. Okay. So taking a look at what happened yesterday, everything in front of this dotted line right here. This was yesterday. If you remember, we were actually starting the day with a little bit of gains, right? Look at this. Right around 10 a.m., we had a little bit of gains. If you remember, we were a bit in the green. We were basically about +5 or +6 basis points BPS, right? We were about 6 basis points up on the day. But if you remember, I said that I didn't trust it and that I thought there was a really good chance that we could lose ground there. And that is exactly what happened. You could see that after pricing came out, we were losing ground, kind of leveled off a little bit, and then we lost a lot of ground. Worst level of the day was right here between 2 and 3 p.m. We were down significantly. Let's see, what was the day before was 99.71 and we were at 99.50. So we were down, and this is about -20 basis points right here. Is what we were down at that point. And then we got a little bit of improvement right here. You see that things started to kind of improve on the day. And we actually only ended the day down about 5 or 6 basis points, which compared to where we were is much better. And what happened here, what gave us this little bit of green right here is that Trump had said that let me see where I can find one that might, hold on, one of these that will sum it up nice and neat here. Nope. All right, so that was right here. Sorry, let me slide this over a little bit so you guys can, there you go. All right, so that was right here that led to that improvement yesterday. So basically, Donald Trump said he called off new strikes on Iran because Saudi Arabia and other allies asked him to. Now, again, y'all know that I have no problem whatsoever calling out Trump. But what I'm seeing here is he talked about that the clock was ticking. And we've seen this kind of Trump cries wolf in his tweets, on Truth Social. I know it's not on Twitter anymore, but he posts everything on Truth Social, and his Truth Social posts. He's kind of been the Trump that calls wolf, and he, says, oh, it's going to, we're going to devastate them. We're going to bomb them. We're going to do all these things. And everyone's kind of ignored it. And so, yeah, he said, hey, the clock is ticking, and, it doesn't get a lot of attention. Yesterday in the afternoon, he said that we had actually, the U.S. had planned for Tuesday to start bombing again. So that would be today. So, is that really the case? We don't know. But he's kind of escalating what he's saying. And he pulled in the allies, Saudi Arabia and other Persian Gulf allies, now pushing for a deal to end the war because they're the ones that are getting attacked. And if the bombing starts, they have to defend their stuff. And their infrastructure has been damaged because Iran can't reach us at the United States. We're too far away. So they're bombing everyone around them that they can do with their cheaper weapons that are U.S. allies. So U.S. delayed the strikes, and Trump said for a little while, hopefully maybe forever, because we've had very big discussions with Iran, and we'll see what they amount to. Now, yesterday, Ron Siegel said that there was something that you had read about how Iran was willing to give in a little bit on the uranium and things like that. However, I'm not seeing that anywhere else. And there's, again, this is all just mainstream media, so we don't have any real information, but it makes it sound like it's a lot of the same thing. um, Iran, here it is. Iran, no deal, no exit. How U.S. Iran standoff risks fresh conflict. And Iran just continues to drag their feet on everything, and then saying they want to be compensated for the bombing that's been done already, that they want to maintain a grip on the Strait of Hormuz, that they want to charge tolls, and nobody is really accepting on that. So this whole thing is dragging on. Again, the reason we talk about this isn't political commentary, my channel, but what effect does all this have on rates and pricing? And that's what you're seeing happen right now. That's what we're seeing happen here in mortgage-backed securities and the 10-year treasury yield. You're seeing the reaction to all of this. 10-year treasury yield up to 4.66, right? So that has gone up. The mortgage-backed securities tanking down hard on the day. Rate sheets today are going to be worse. We've already seen the worst pricing of the year, 6.68. The previous worst before that was 6.64. If we go ahead and let's look at the little graph here and get rid of all that other stuff, right? So we had 6.64. That was on March 27th. We'd had a bit of a cap to rates and pricing, but that cap has disappeared. And you can go back and look at my lives from the last couple of days. I told you that I thought we were going to break above that. And I'm telling you today that I think we're going to continue to follow that path. I think we're going to go and see highs we haven't seen since July. So right here, you could see, 6.75, 6 7/8. This area here, I absolutely think that is where we are headed right now. I think we will continue to go that route over the next couple of weeks, especially if there is new military action taken in Iran, if we start bombing again. If there is not some kind of something that opens the Strait of Hormuz, we're not going to see things start to reverse. We're not even seeing bonds hold back. You're going to see them continue to get worse. And again, we're pushing up. 7 is not out of the realm. So reprice risk on the day today is high. Today's selling is already out of hand, and it could get worse. You take a look. We switched to the 5.5 coupon. The 5.0 is down 60 basis points on the day, 60 basis points. The 5.5 down 41. And then the 6.0 is down 23. All right. So how bad it is, the reason that you're seeing less sell off on the higher coupon is because it gives a higher yield. So they're not, as investors and traders are preparing for higher inflation, they're willing to take that higher yield. That's how they protect against the inflation. So, you're not seeing it as bad here, but it's still terrible. But the 5.5 is the one I'm watching. What do you want to call it? 41 basis points, 60 basis points. It doesn't matter what we call it. What we call it is higher rates. Rates will jump up. Yesterday, there were quite a few reprices worse, a lot of reprices worse as we went through the day and got worse here. Let's take a look and use Mortgage News Daily. Look at all those reprices worse. So there were a lot of reprices worse, 33 of them, according to this on the day yesterday, that were reported from Mortgage MBS Live users. And again, this is not my product. So because I do share this with you, I'm just going to give them their due and their plug. MBS Live is from Mortgage News Daily. It's a paid product. If you want something where you can track this stuff in real time, you can use MBS Highway. MBS Live is a great solution. And because we're sharing MBS's live screens, I will just give them their plug out of fairness and dueness there, right? So this is what's going on this morning. Everything has been, the same way that we are is you want to lock. You need to be, I've been saying to lock since before Friday's sell-off last week, and it's only gotten worse. So we take a look here, and last week it was all red. right? Last week was all red. That's right here, ending with Friday's biggest sell-off. Now, for those of you that might be newer and I haven't explained, how these Japanese candlesticks work, when we see a red candlestick, that means the pricing got worse on the day. When you see a green candlestick like this one, that means pricing should get a little bit better on the day. Yes, there was a green candlestick here as it kind of took a breath, but Monday here, worse, Tuesday, Thursday, Friday. So, I mean, we saw there was 110 basis points in loss last week. Basically, that means you're going to see rates jump a quarter point. If you take a look at where that was, let me look at the calendar here. So we were at the 11th, the 18th, and what is that? The 4th. So when you look at, it's 1, 2, 3, 4. Yeah, 4. Okay. So you look at the 4th, we were at 6.56. Now today you're going to be at like 6.75. You're generally seeing rates that went up an eighth. They actually didn't go up as bad. Well, that's because this week they improved. Here you go. Best level was 6.42. So then last week we went from 6.42 up to 6.65. So you saw a quarter point jump in rates there, which is what I was saying. So yeah, I'm sorry. I just got a little off on my calendar there. So looking here, we saw a quarter point jump in rates. When you lose 110 basis points, you're generally that lines up pretty well. 110 basis points, a quarter point in rate. This morning, we're likely to see another eighth worse. So 6.68 would get, we'll call that 6 3/4, 6.75. So we're very likely to see that continue to move. So we are back up. If we look in here, that'll put us all the way up to here already. So we're at 6.75. And guess what's coming? Guess what's coming? This is for conventional conforming. I know govies are a little bit better, but yeah, we're looking at 7s, y'all. Rates are going to continue to move higher, especially if there's military escalation. Right now, expectations of a Fed rate cut have all disappeared. Markets are expecting the Fed to hike rates by the end of the year. Almost a 60% expectation that we'll see a rate hike by the end of the year. So 55%. So it's a 55% expectation. Trump can stand there and stamp his feet and tell Kevin Warsh that he needs to convince everybody in the Fed on the Fed Open Market Committee to cut rates. The Fed's not going to cut rates. Inflation is a big concern, huge problem. If we go ahead and throw the headlines up there, all the stuff that we got going on this morning and the things that we're seeing going on here, Pakistan deploying jets over to Saudi Arabia. They actually have an agreement to help support them. Pakistan's deployed 8,000 troops and a squadron of fighter jets and an air defense system to Saudi Arabia under a mutual defense pact, ramping up military cooperation with Riyadh, even as Islamabad serves as the main mediator in the Iran war, which conflict, it's not a war yet. But again, this is what we're seeing happen. There is signs that we're going to see more escalation. U.S.-Iran standoff, war of attrition with no exit in sight. Both sides seem to think that the longer this goes on, that they get the upper hand. I don't know if Trump really believes that. The media says that seems to be the case, but I don't think he really believes that, especially as we get into the midterms. Trump knows that we've got to get this thing wrapped up. The price of oil, I'll bet you Republicans are not happy right now. Unless there was a finger hovering over the red button in Iran to blow us up with a nuclear bomb, I bet you that Republicans are like, why did we get into this mess? Behind closed doors, I'll bet you everyone is upset. Again, I don't have any inside information, so I can't tell you if it was a good idea or a bad idea. We can only form an opinion based on what we think, right? But what I can tell you is the results. The results are, I spent $65 to put gas in my wife's truck yesterday, and the results are inflation globally, a big concern. This is a problem all over the place. U.S. yields flirting with 2007 highs, entice and divide investors. Investors are really struggling. A lot of investors think that rates are going to stay higher for longer at this point. Remember, before we got into this whole train wreck with Iran, mortgage rates were in the high 5s for conventional conforming. The mid 5s are even lower for govies, FHA, VA loans. And now we're back up into the high 6s. And the reality is, even if things start to improve, there's not much room for them to go down. Once the Strait of Hormuz opens and oil prices can fall, we will see something change. But right now, it's not enough. You look at the price of Brent oil, and I'm going to say this one more time. If you can see how bad things are right now, if we get up to 120, that is going to devastate us mortgage rates. This will send rates soaring. I'm hoping that things improve rather than get worse. But this is the ICE Brent crude. If you see this number hit up to 120, which we have seen one time, and it came right back down, you can see how bad everything's already getting. So, all right, let's see, Ron, you've got a lot to say. Let's go ahead and bring you guys into this conversation a little bit. So, and then we will get into the important things. They asked him not to bomb Iran in the first place. If you're talking about all the other Republicans, I'm assuming. There are a lot of reports Iran can reach the U.S. They have components for an air ballistic missile. What is that? The ABM? I forget. What are they? Something ballistic missile with an 8,500-mile range. Guess where that would land? Yeah, that would be California, right? I don't think today's move is Iran related. You think the reports from CNBC attributed to Mohit Kumar, chief economist, strategist Jeffrey, very credible, very hawkish, Bank of America survey of global fund managers. That's a great point. If y'all are following with what Ron is putting down here, basically he's talking about the idea that, where everything is going and where bond yields will have to go, and the Fed not being able to cut rates. So MBS Live, MBS Highway, spend more time on MBS Live than any other source. He does a great job. Yeah. So there's, again, I'm not even friends with Matt Graham. He doesn't like me. I started help launch ratealert.com a decade ago, I've been gone since 2014. I've been gone for 12 years. I helped launch it in 2010. But Matt Graham, the principal over at MBS Live, doesn't like me. And I still say that he's a super bright guy and they are a great product. So Pakistan is unreliable. I can't believe we would allow Pakistan jets behind our lines. Pakistan is harboring Iran planes while acting neutral. Yeah, I think it's very complicated here. David says it's a mess. Our industry is paying a big price for it. Yes, very much so. What's going to happen now is we're going to see the mainstream media start to really start trumpeting about rates being higher, and it's gonna freeze everything. It's gonna make it hard for everything. So Christy Resource summed it up in the best pictures in a way to look at it. Anti-ballistic missile. Thank you. Anti-ballistic missile. Still waiting for that refi boom. Retirement pushed out another 10 years. Yeah, exactly. What's going to happen is I think that this is going to cause a recession. And, Ron and I were talking about this the other day, and he said, not a deep recession, but I don't think it needs to be a deep recession. I think that what's going to happen is this is going to push us into a recession for the second half of the year, sometime maybe in the fourth quarter, if it takes that long, and you'll see rates drop then. Right now, speculation is the Fed will have to raise rates to quash inflation, but I think fatigue is going to set in. People are not going to be able to spend, and things are going to tighten up. And I think that we're going to see things, that's when business is going to get bigger. But for now, it's just, you got to claw out those loans, baby. Stop worrying about vibe coding your websites and get out there and prospect your asses off. Jamie Dimon defended campaign against Iran as overdue. Iran's 45+ year history of funding terror proxies made it a necessity. Yeah, again, but now I'm getting close to the line of political commentary and how effective it was, what we've actually done, what we say we've done, what we think we've done. I don't know. So, I really, my focus is that it's going to continue, that rates are going to move higher, and that there's not really anything that's changing there. So keep that in mind, my friends. Keep that in mind. Ron Siegel said the refi boom is here now. You can steal the strategy, cash out now, and deal with debts. 6 to 12 month refi again with better rates, higher FICO. Yeah, so it's kind of the 1-2 punch. For those that are interested, rsrlinks.com/2step. Without seeing, but with Ron sharing what he's got on there now, somebody that is deep in debt, it's going to hurt their credit score. They're going to be over that 30% threshold for available credit versus credit used. So you do a cash out, 6 to 12 months, rates will drop, and they will drop. Once all this stuff blows over, oil prices drop, rates will drop again, and then you've got the ability to do that. So I wouldn't be paying points right now. I wouldn't be doing buy downs right now, so keep that in mind. But again, that's for you guys to decide. Wow, 25 minutes, Hammer. Oh my goodness, stop talking. All right, let's just let's just take a look and see what you guys put down for Angel Food versus Devil Food. We got Holly Johnson, Angel Food Cake. My wife and I are definitely a yin yang. Angel's Food Cake with mocha whipped cream filling and icing. Damn, Tom, that does sound yummy. Strawberries and cream Angel Food Cake. That's like what do they call that? Strawberry. There's a name for that. Strawberry something when it's got the little cup. That's from Angel's Food Cake. Vicky, there's my gal. There's someone else supporting Devil's Food. Randy said, glad to hustle, lock a couple new contracts yesterday using the alerts. Fantastic, my friend. I'm glad that they helped you and appreciate you sharing that. So, in fact, let me take a quick screenshot of that one. Bear with me, y'all. I'm going to take a quick screenshot and then I'll wrap up. So, let me move this over here. I got to look at the camera. Actually, that's kind of a good, well, I'll look at the camera. Hold on a minute. There we go. Thank you, sir. Appreciate you. I'm just taking a screenshot of that. Okay. So anyway, y'all, lock them up. It's going to get worse. So I'll see you guys tomorrow. Hope you guys, stay positive, keep prospecting. That's all we can do. Put your head down, stay busy. All right. I'll catch y'all later.